maybe listen to this webinar in a recording, but this is the last that I'm going to do before the kind of, I suppose, September season, just to give us a bit of a break. But there are recordings on our website, alphawealth.ie, if anyone would like to listen into. For those of you that don't know me, as you can hopefully see there on the screen, my name is Nick Shalambus, and I'm the Managing Director of Alpha Wealth. We're a small to medium-sized financial services company based in Cork, and we have a kind of I suppose, a nationwide presence. We do financial reviews primarily over Zoom in this climate with individuals in three main areas, which tend to focus on savings and investments, pension planning, and protection policies. The Savings and Investment Club is something that we're really excited about. It's a savings opportunity and lump sum investment for all individuals, whether you are starting out in your financial career, whether you are very late on, whether you have children, whether you're saving for a mortgage. It covers all aspects. And I'm just going to spend the next 20 minutes or so going through that. There is a chat section in the webinar, which if anyone does have any questions, it will be minded. I am joined by a couple of my colleagues today, Keenan Cunningham and David Looney, who are also assisting with the reviews and obviously with the presentation. So just to maybe kick off, for those of you that just joined, we try to keep these sessions relatively informal. I've just thrown up a poll there, which if you'd like to kind of maybe answer, just to get us thinking about, I suppose, what areas are important to us. With regards to Alpha Wealth, and I'm going to spend the time this morning or this afternoon talking about savings and why would you join the Savings Investment Club. I am conscious that some people may have already started savings with us previously. And really, this is, I suppose, an addition and a complement to existing plans. It's very specific. And what we've done is we've really, I suppose, brought our expertise to the table in terms of what we feel is the best option out there as an independent broker, and try to offer it at the lowest fee that we possibly can. Okay. So again, just to explain what we're trying to offer clients today. And it's a very simple, I suppose, easy opportunity for people to get the best return from their savings. So with regards to savings, and I suppose the subject for today, people save for many different reasons. And every review that I have with a client, every conversation is really geared towards, okay, where are you at in your financial life cycle and what are you aiming for? So whether it's saving for a property, whether it's saving for your kids' education, for your retirement savings, the key question really is, what are you doing to get the best from what you can? So however much income you have available to you, or whatever lump sum that you may have available, is that money really working? Now, we all are aware that we are in a climate where the banks, credit unions, post offices are not offering any rates of interest. And our role as financial advisors and as independent financial advisors that are not tied to any company. I've worked previously in banks for many years before starting Alpha Wealth 8 years ago. And the problem with the banks is that not only are they not particularly competitive, but they're also tied. As I'm sure you're aware, Bank of Ireland are now tied to New Ireland Insurance, and AIB are tied to Irish Life. I have no issue with those institutions, and we do provide products from them. But what I would prefer is that our clients can see the full spectrum of all of the insurance companies operating on the island of Ireland. So given, I suppose, the environment, where are we at with savings rates? Well, for those people who have children, myself included, children's savings rates are absolutely atrocious. As you can see there, that you are unlikely to make more than 1% a year interest. And the problem for many people is that because these tend to be longer term plans, the rate of inflation is really going to erode that. With regards to adults, it's even worse. And as you can see from the rates there, and they're probably quite generous because the rates are typically tending to fall The best rate at the moment is with Ulster Bank at 0.85%. And that doesn't allow for DIRT, which is currently 33%, which is taken annually from those returns. So really, I suppose the key message to see here is that banks have become like vaults, whether you're with a credit union, post office, any of the banking institutions, there is no interest to be earned. Lump sums are worse again, as you can see from the rates there. So what are people typically looking to try and achieve? Well, for those people that are looking to try and get on the mortgage ladder or to reduce, I suppose, the burden of borrowing money from the banks, typically the example that I've put up on the screen here is that it just shows you that if you're starting out for the next, say, 3 years to try and build up a deposit for a mortgage, and for a property, which in this example is costing about 230,000, if you're a first-time buyer, you need to generate 10% of that, which is obviously 23,000. It's going to take a contribution of about 500 a month to do so. And that's with a return of investment of 5% net. Now, obviously, if you save that money with a bank, that's only going to generate 18,000. Significant difference in the return on your investment. And this is why we'd encourage you to look at the Alpha Savings Club as an option for you to put that money to use. Realistically, we want people who are in a position where they can afford to save for a period of 3 years or more as a minimum. Whilst these funds can be accessed earlier than that, generally speaking, we don't recommend that. What about those of you that have children and may have started something with the credit union or any other financial institution? What are your options? Well, again, unfortunately, really, we are being forced to look at alternatives. People probably know that, there's lots of costs that go into third level education, funding children's, I suppose, education plans, not just in third level, but even before that. My son is attending Christians in Cork, and there's an annual bill that has to be paid for, and these things have to be funded. So typically, for those of you that are looking at the costs of, I suppose, third level education for children, particularly depending on whether your child, stays at home or may require, I suppose, living accommodation, it can, equate to quite a significant sum. Typically speaking, the average rule is that it costs about 30,000 euros per child to put them through third level education. So really, what are the solutions? Well, as you can see here, with the child benefit of 140 a month, if you're saving for a period of, say, 5 years, that's going to accumulate a fund of about 9,000, again, with a decent return on investment, which the banks won't provide you. If you extrapolate that figure over a longer period of 12 years, it's about 25,000. And if you start from the time that they're born, that should generate a fund of about 42,000. So that will be a figure that will be enough to get them through college. If you are, I suppose, starting at a later stage, you may require a lump sum contribution to bring you up to those figures. But again, it's all about, I suppose, the relative benefit of the amount that you can afford to save. You can see there, by putting a lump sum in with a regular contribution does have a fairly dramatic impact on the return. So I'm now going to talk to you about the Savings and Investment Club and really what it does and why it may suit you. And again, this applies to anyone who has savings either with Alpha Wealth or elsewhere, who may be looking to, I suppose, get a better return from their investment. You may be saving already with one of the insurance companies, Irish Life, Aviva, Bank of Ireland, whomever. And I feel that this is a better option, primarily because I feel it's going to be cheaper for you, and cost can be a big reduction or drag on return, but also in terms of the performance and the annual returns that I believe that this will achieve. So in terms of what we require, the minimum entry level for this plan is 100 euros a month. There is an option to put in a lump sum, and you don't have to save regularly, and that can be as little as 5,000 euros. And you can do both, of course, and you don't have to do them at the same time. So somebody could start saving either the child allowance of 140, they can save 100, they can save €1,000 a month, or indeed more than that. And they can build that money up over a period of time. As I said, we recommend that people save for a minimum period of 3 years, and you can save for as long as you wish. It's an open-ended scheme. And what you get from Alpha Wealth is a very straightforward, streamlined process. It is very easy to set up, and that you get information from us on a regular basis. We're going to send 6 monthly updates to people who are part of the Savings Club. And we're also going to be in contact with you on a regular basis. There's a monthly newsletter that you can sign up to give you specific information about the funds and the performance of the club and your particular savings. There is also online access to these plans. You can go in on any given day and see exactly how the savings is performing. Who are we recommending? Well, as I mentioned earlier, we are an independent broker. We are recommending Zurich as a savings plan. And the main reasons being is that Zurich have a really good track record. I advise my clients in terms of savings, they are the best provider in the Irish marketplace. We like this plan with Zurich because it provides an option to access the money at all times without penalty. So somebody could save for 6 months or for 60 years. It's completely open-ended. And I do believe that all of us should have savings put away that we can access, but it's going to give us a better return than the banks will provide for. And I think that's a really important thing, because if interest rates do rise in the next few years, and if somebody wants to move back to the bank or the post office, then it's their right to do so, as I said. So it's a really nice feature to have on this plan, and it doesn't cost you anymore. And the other key thing about the plan with Zurich is that it's really diversified. And I'm going to talk to you a bit more about that in a second. So whenever we talk to clients about savings, we talk about risk and reward. And as you can see from the chart here, many people have money in the bank, which is sitting in the risk profile 1, where your money is making no return, but it's not losing money. And then on the other side of the scale, which is a 7, are risky investments, which could make a lot, but potentially lose a lot. The example would be things like cryptocurrency or Far East Asian equities or so on. With regards to the plan that we're recommending through the Savings Club, it's going to be a mixture of risk level 4 and 5. And as you can see from the chart here, you're looking at returns, and I want you to err on the low end of these numbers on these chart bars above the solid line, between 5, which is the low end of the risk level 4, and 10% per annum. That's the goal for this plan, and that's the stick that we want you to beat us with. We are saying to clients that if you sign up to the Savings and Investment Club, we are looking to get a return on an annualized basis of between 5 and 10% per annum. There is no guaranteed return, of course, and your investment amount is also not guaranteed. Anything that's guaranteed is on a risk scale of 1 and gives you a 0% return. There is no free lunch. Now, on the downside, the risk to your investment is between 5 and 10% a year also. But the key message I want to get across to you is that Zurich, as a really good manager of money who made money during Brexit and also during COVID last year, are consistently going to give you a positive return on investment rather than a negative. And we believe firmly in their ability to do that. So what exactly we're going to do? Well, we're going to use 2 funds within the Zurich suite of funds. And we may amend this in the future, depending on how we see things. But the funds are going to start with a fund called Prisma 4, which typically, as you can see here, would give a return of between 5 and 10% per annum on a rolling 5-year basis. Currently has a risk rating of 5, which I mentioned we're going to blend, but would typically sit in the risk category of 4, which is why it's called Prisma 4. The reason why it's at 5 currently is that there's a little bit more volatility at the moment because of the climate we find. If you ask me, well, Nick, what exactly is Zurich going to do with that money? Well, the asset distribution currently, as you can see on the bottom left-hand corner, has about 58% in equities or shares. And that shouldn't worry people. Shares are a really good growth asset as long as you invest in the right ones. And Zurich are a fantastic manager of money, and they will choose the right companies, mostly the large blue chips such as the Amazons and Microsofts that they invested in heavily last year when COVID broke, knowing that they will be the companies that will benefit from the environment. And they are managing this on a daily basis. And anybody that thinks that they know more than Zurich do and read things in the press about the way funds are going, Zurich, I assure you, would have already taken countenance of these things and would be much more in tune with the way that the environment is going. You can see that there's a great diversity of sectors that they invest in, and also geographically, they invest all over the world. The predominant area being the US, because it's by far the largest market. But again, you cannot paint everything with the same brush. And Zurich's performance in their funds typically vastly outperform by double their closest competitor last year. The other fund, and again, just to put some context to, the Prisma 4 before I talk about the other fund, year to date, it's up about 6.4%, which is phenomenal. I'd slightly dilute the 1 year performance, but what I would like you to look at is the 3 year average performance, and it has annualized about 9% per annum to the end of April this year, which is phenomenal. That's not the level of expectation insofar as I would expect these funds should generate a return typically of at least 5% per annum. That's the target level that we're aiming for. And in a 0% environment, I believe that that's a really good return on investment. I always say to my clients, be mindful of anyone that promises you the pot of gold at the end of the rainbow. Anyone that says that you can make more than 10% per annum is alluding to the fact that there is risk in what they're doing. And whilst there is some risk in this plan, it is moderated by the diversification of funds and by the split that we're making. The other fund that we're going to blend with the Prisma 4 fund, and it's going to be on a 50-50 split, is called the Balance Fund. And this again is a fund which has had a long track record. You can see here its history over the last 20 years. There are some negatives, and one of the big negatives you can see is back in 2008, where it had a reversal of 30%. Now that may worry some of you, but if you think to what happened at the time, obviously that was during the last major recession when funds took a massive hit. But the key aspect of this is really to look to 2009, 10 and beyond that. Because as you can see, that anybody that stayed in these funds for at least 2 years after that real significant pullback would have seen a big reversal. Now, obviously that was an extreme time, and bring you to more recent times. The one pullback in the last 10 years occurred in 2018 at minus 3.6%. And I suppose, again, it's really just to moderate the potential returns that I would like clients to expect. You can see here, I appreciate it's very small on the screen there, but the main holdings tend to be the large blue chips like Amazon, Microsoft, and so on. These are not small companies that are likely to go out of business any day soon. Okay. With regards to some of the advantages of the plan, as I mentioned earlier, you can access the scheme without any penalties with 5 to 7 working days notice. But I'd like you to give the plan at least 12 months to give it time to grow. It's about having access to the information. Alpha Wealth operate as the eyes and ears for you. We don't expect anyone to deal directly with Zurich. They're a broker-only company. They would prefer to deal with an institution like Alpha Wealth. And we are the ones that provide the update. We give you the advice. We send you the information. And to set these accounts up, it's really simple. We typically use DocuSign, and it can be set up within 10 minutes. The only things we require are the amount that somebody wants to save or indeed invest, some information such as their date of birth and their address, the identification, which is a copy of their driving license or passport and some proof of identity, and the bank details on the date that they wish to make the payment. And that's it. It's really simple and straightforward. And for those of you that already have a savings plan with Zurich, but like the idea of the savings club, the main thing is we are offering this at a discounted fee. And for this session, and for those people that listen to the recording of this, we are offering 100% allocation on your investment. The government charge a 1% levy on the life insurance company savings plan. So whether you're saving with Irish Life or Aviva or Zurich, the government will take 1% of your payment. So the example of, say, €100 a month, you're going to see 99% of that go into the plan. Not many brokers will actually even tell you this because it's not a fee, it's a government levy. We are giving back that fee, that levy to clients out of the commission that we earn from Zurich, which we'll detail very clearly to you in a 3-page letter to anyone that wants to look at this further. And it's, I suppose, a thing for you yourselves to understand that our commission doesn't deduct from your investment amount. So basically the way we operate is that Zurich pay us a finder's fee that doesn't eat into your investment amount. And as I said, until the end of August, we're giving clients back that extra 1%. The management fees for these plans, for regular savings schemes, it's 1.6% per annum, and for lump sums, 1.35%. Zurich have recently increased their fee, of which Alpha Wealth take 0.25% on the ongoing fee. And this is the cost of managing the fund. This is the cost of the information and reports that we will provide you. But if you look back to the returns that these funds have achieved, which have annualized over the last 5 years, approximately about 8% per year, net of fees, I think that that's a significant return on investment. The last aspect of these savings plans is that they are liable to tax. You can put them in your children's names, where it does alleviate the tax burden of any gift or inheritance tax. And you can also do this for grandchildren as well. But the key thing to note is that there is tax applicable regardless of who invests, whether it be a child or an adult. And again, we can go through the implications of you. But the key thing to note is that you cannot avoid the tax man, but it's a much better return on investment than you will achieve by leaving your money in the bank or by leaving it in the likes of an Irish Life or an Aviva, if you're paying a higher fee than the fees that I'm quoting there on the screen. And again, it's worthwhile just checking in with yourself, or indeed allowing us to look at it for you without any obligation or charge as to what your savings plan is doing. Many people would have set up PIPs and PEPs and savings plans in the past and think they're doing really well because their performance has been good. But what I say to these people is that it's all about the relative. It's, could you have done better if your fees had been lower? Could you have made more money if you were in better funds? And for me, the Balanced Fund and the Prisma 4 Fund, for what are typically regarded as medium risk funds, are best in class. And that's what I'm interested in for my clients, as is David and any other member of the Alpha Wealth team. Now, just to finish off, in terms of what we do, as I've mentioned, we provide annual reviews. We'll send you a 6-month update on the Savings Club. There are monthly updates if anyone wishes to receive them on the Zurich fund offerings. We're happy to have conversations with our clients. If anyone wants to make any adjustments to them, which is very easy to do, we can do that. And also we advise on any previous arrangements, advice on retirement plans, funds advice and projections. In respect of other things that Alpha Wealth offer, just to mention to you, and for those of people that may have joined late, we give mortgage advice. We don't sell mortgages, but we certainly can assist our clients in getting a lower rate for themselves. What I say to everyone is that you should be achieving 2.25% on your mortgage. And if you're not, come and talk to us and we'll tell you about how to navigate that. If you're in a fixed rate mortgage that's higher than that, it's worth finding out what the breakage fee would be, because there may be an opportunity for you to break the mortgage term, the fixed rate, and to get onto a lower rate and save yourselves quite a significant amount of money. And again, with very simple, advice, it's something we can help you do. Protection plans. Some of you may have mortgage protection, life insurance, and so on. And one of the key things I say to everyone is, are you paying the lowest possible for what you have? And it's something that we can easily do for you with no charge or indeed any hassle. And then the final area is independent pension advice. What I've mentioned to you here about funds and performance, I would, I suppose extrapolate that out to any pensions that people have, whether you're working for a company and you'd like a bit more of a handle on how your pension fund is doing and what options you have. If you'd like to come back to any of the Alpha Wealth team, we'll be more than happy to provide some advice to you, again, completely free of charge. So that's everything I wanted to say today. Thank you again for your time. You can see our social media channels for those of you that maybe aren't too familiar with us. And I would suggest that you might look at our website. There are some previous webinars that we have done about how to save money in your mortgage. Indeed, in terms of other forms of investment schemes, particularly for those of you that are subject to tax at the higher rate. But I would encourage you to set up the savings plan or indeed investment through the Savings and Investment Club. It's a really great opportunity for people, and there is an opportunity for people that would like a more specific fund, if you have any particular preference or appetite, to deviate from that. And that's something that, again, any advisor in Alpha Wealth can talk to you about. Just to finish off, and I think I'm bang on 25 minutes. Thank you for those of you that have answered the poll. It seems that there's, I suppose, a clear winner in two of the areas, which tends to be saving for a purpose, such as children's education and for retirement. And again, it's just interesting to see the results of that. So again, I say to you all, thank you for your time and attendance and